But you know that the early adopted, so Solana should be what Ethereum was in the last cycle.
Recently, in an interview, Raoul Pal talked about the upcoming ETH merge, crypto regulation, and then he also talked about when Bitcoin could reach its all-time highs and when we could expect it to bottom out. He then talked about the Terra crash and how it'll continue to affect the crypto market. He also talked about the financial sector and why he's worried about it. He talked about inflation, recession, China's coveted stock market, and the crypto market. If you want to hear his comments on Bitcoin and the crypto market, then watch this video all the way to the finish. And don't forget to press the like button and share your thoughts on Raoul Pal's interview. Now, let's take a look at it.
We've had this really complicated macro situation where we had supply chain shocks, which was people can get factories and ships sorted out because people were still in lockdown with COVID. There was a massive backlog of orders, and this filtered through, and that raised prices because everyone, if there's a shortage of goods, if you pay more, you get the goods, right? So that puts prices up. Then we start to see issues in the commodity sector that have underinvested. So everybody comes online again, everybody wants oil, gas, everything else. So commodity prices start exploding. Then we add on a Russia-Ukraine war and the penalties on Russia, and that takes a bunch of commodities out of the market. So now we're in this perfect storm of prices rising. But people are also scrambling, like all of us, probably you guys as well, to try and hire people. So we're all bidding up wages. But wages, outside of some jobs, aren't rising as much as prices. So what we've got is this situation where wages have gone up, let's say 4.5%, and prices have risen 8.5%. So everyone's taken a 4.5% or 4% haircut in their net worth. Now that hit crypto. It started as soon as inflation happened, because if you think of crypto as a groundswell movement, basically the dollar cost averaging by average people who are in the space had started drying up. And we saw all the on-chain activity basically flatten out. And we've been in this sideways sloppy range because we've seen no network growth across the entire ecosystem. Within crypto, we'll talk about that later. But so that slowed down there. But we still had that kind of after effects of stimulus, people coming online. So economies were growing, but it now looks like all the forward-looking indicators are starting to roll over and starting to show recession because you've basically given everybody a income haircut. So discretionary spending is going down the toilet. We're seeing it in things like restaurant spend. We've seen consumer credit going up. So people are desperately trying to borrow money to maintain their expenditure plans. We've seen mortgages go up by the most in history as a percentage. They've absolutely exploded higher. We've seen 2-year interest rates with the largest 1-year rate of change in all recorded history. We've seen, so what we've got, if you add all of these things, and we've seen the US dollar going up fast. When you put these things together, what you've got is the fastest tightening of monetary conditions in history. And we've seen it. The big tech companies are all starting to lay off staff. They're all like, holy shit. Even Amazon said we're overstaffed. So we've completely turned the economy from, oh, great, we're coming out of recession from the pandemic to, oh my God, we're going straight back into recession. The market's tightened before the Fed even got round to doing it. The market did its job and it stopped economic growth dead in its tracks. Europe's already in recession. China looks like it's in recession and is in lockdown again. To complicate the picture, we don't know what that means for supply chains. So we might have these, I think inflation falls, and I think the Fed pivot soon. It's like 2018. But 2018, the S&P was down 22%. It's only down about 15, 16 now. So I think there's more pain to come before the Fed suddenly realize that growth's gone. And the bond market will tell us that first. It always does. Yields will start falling, and that will be probably the signal, as we had in 2018, crypto stabilizes, the growth end of equity starts stabilizing because they realize that some stimulus is coming. And so there's a lot. It's a bit of a monologue, but there's a lot to get through. Now, if inflation is still high-ish, because it's going to take a while to come down, but I think it comes down pretty fast. But let's say it's still at 5%, and the economy is now headed directly into recession. What do the Fed do? Well, they're unlikely to purely stimulate it because optically that doesn't look right. So my guess is they'll do what Europe's starting to do and Japan's starting to do, which is direct transfer payments that I've been talking about for a while, which is basically MMT. So i.e. you give money to the people who need it to cover the costs of their bills going up, and you basically finance it by buying bonds. So I think we're going to see stimulus coming faster than people expect in certain parts of the economy. In Europe, they're doing it for corporations who've got high energy prices, and they're doing it to households. Japan's doing it to households as well. So it's coming. So there's a lot. There's this transition from inflation to demand destruction to stimulus. That cycle is in play. The more mature the network gets, the less volatile the price becomes. So I was expecting, and yet to be proven out, that each time we go through a bear market, that we see lower percentage falls. So Amazon is, I use this as my best example of network adoption models. You know, it came out of, it went public, it fell 95 or 96% in 2001. It then rallied back, it fell 65%, then it fell like 45%, and then the sell-offs were 30%, and then was even less. So that's because the network gets more mature as more and more people join it, so it becomes less volatile. So that should be true of Bitcoin and should be true of Ethereum. And I think that's playing out. So what ordinarily would have been maybe at this point down 70% has now been in a sloppy down 50% sideways range. Okay, that's a whole new thing we haven't seen before. So it's interesting. Now, it's yet to be proven out. I look at the chart of Ethereum and I'm like, you know, this could be a head and shoulders top, in which case we go significantly lower. You know, we go back down to 1500. Who knows? Or what's more likely is, I think, is we're forming another sort of wedge, and that therefore 2000 is the low. I just, you know, I don't know. These are volatile assets. But you know that the early adopted, so Solana should be what Ethereum was in the last cycle. How much was Ethereum down in the last cycle?
95%.
Oof.
Well, it's going to be somewhere around that, right? And we've seen that play out, that kind of, you know, Ethereum's been slightly different because it had so much adoption in this cycle. But generally speaking, they kind of look like each other at early stages, like the Amazon. So the early ones look like Amazon, and they become less like Amazon over, you know, they become less volatile over time. So Bitcoin and ETH seem very similar these days in that kind of volatility structure. But, you know, Solana, Terra, all of this needs to be proven out. It feels structurally different. But, you know, it's very difficult when markets like this, when everything looks absolutely terrible, you know, it's very easy to extrapolate the worst. But generally speaking, it feels that it's going to be shallower and shorter, because I don't think it's driven by the halving cycle any longer. I think this is driven by the macro. This is a pure macro event. And I think as Ethereum has become a more dominant ecosystem over this cycle, its own kind of triple halving, or whatever you want to call the ETH2 merge, is going to be another factor within this market. So I think the structure of the markets changes, and that's just the network maturity that we talked about before. It's just how things evolve over time. So I think the structure has changed. I think it's going to be shorter because we think the macro cycle is shorter. I think we all kind of agree that feels like that's where we are. So it's short and brutal, but it's not been as brutal as the past ones, because the past ones were crushing bear markets. Don't forget, this time in 2018, we talked about 2018 a lot in this chat, is at that stage, 2018, we were down huge. I can't remember what we were down in Bitcoin by the 2018 Fed pivot, but that was the low. So it looks that Ethereum is over fair value because of the burning, which is a different source of demand that doesn't appear in the Metcalfe's law kind of models. I think that's interesting, and that has been why Ethereum has done very differently. Now, if that increases because of the triple halving effect, then that should further lead to the Bitcoin outperformance, the ETH outperformance of Bitcoin, which I've been watching for an extended period of time, and that seems to be ongoing. So barring any change in anything, it should outperform over time. unless something dramatically changes with volume structures. Now, we go back to earlier, what I said is, when I look at my analysis, Ethereum is going nowhere. We've got no new participants, and Bitcoin's going nowhere. But Ethereum has had luck because it's had NFTs, and they've